Hey, welcome to the program, everybody. It is really good to be back. It's another Monday night, and we've had quite a weekend. My wife and I traveled with some friends of ours up to Nashville and went to a concert. Now, I tell you guys, if you've never heard of a performer called Lauren Daigle, Daigle, you should look her up because she's really good. And so, anyway, we had a great time in the great city of Nashville, Tennessee. And, there are so many talented people there, and only just a fraction ever get noticed and recognized. So it was a great weekend. So, so I'm still recuperating from that a little bit. And so one thing I want to share with you at the end of the program as well is I don't know if you guys have ever seen a swarm of bees, but I found one last night by accident, just kind of hanging out. And so I took a little video of that, and I'll share with you what I did with all of that. So that I thought might be kind of fun as well. So I'm glad you're here. I am excited to be here tonight. We're going to talk first about a stock called Salesforce Inc., which is ticker symbol CRM. Now, how did I come up with having this topic tonight? I came up with this topic because in the Discord, if you're not a member of the Discord, go into the notes of this video, and it is free to join. So all you got to do is just click on that and, get into the Discord. If you have any trouble with that, certainly let me know. But we have nearly 100 people in there now, and we talk about stocks. And one of the new channels that I have put in there is Questions for Kevin, KWESTIONS, Questions for Kevin. So this came from my good friend, ex-dividend dad. So I thought what we would do is instead of me putting slides together, I thought what we'd do is I would just kind of walk through some of the apps that I use and kind of look at it from that perspective. And I'm calling this not a deep dive because I'm not going to spend forever on it, but I'm calling it a shallow dive. And really what we want to do here is find out if it's something that we should look at further. Okay. And I see a note here from Kevin Mendoza. And it's about the eclipse, and the eclipse was pretty cool. From Alabama, it was probably 95%, not the 100%, that part of the country saw, but we did see some. It was really cool. Street lights came on in the middle of the afternoon. It was really kind of freaky. So it was a great afternoon today. So with that, let's get started. I'm going to share this screen with you, and we're going to start with this company called CRM, or it's called Salesforce Inc. It is, I think this is the right one. Let's make sure. I don't see the name for some reason. Yeah, there it is. Okay, so this is Salesforce Inc. It is, the reason I pulled this one up first is because I like the way that Seeking Alpha kind of shows the historical charts. It's a lot easier to kind of get it in one picture. But in the last day, so today it was down 0.06%. Nothing exciting there. Last 5 days down 0.81%. The last month down 1.69%. And in the 6-month period, it is up 45.61%. Over the last 12 months, over the last year, it is up 57.57%. And over the last 5 years, it is up just over 90%. So is it something that is worthwhile investing in? I want to come back to this chart in just a few minutes, but let's kind of move over to one of my favorite apps, which is Morningstar. And we have Salesforce pulled up here. One of the things that I look at is actually there's in Morningstar, there are a couple of things that really line up well with my style of investing. And that is that they measure economic moat. And if you don't know what an economic moat is, it is what I call a competitive advantage, a significant competitive advantage. And that means that either it is, there's a big company and they can put up some barriers to entry. Maybe that you need a lot of capital to get into the industry. Maybe they have what are those called? The where they why is my brain not pulling that up? But anyway, where a patent. Maybe they have patents, and so they have really locked in the intellectual capital, the intellectual property. So there's maybe some things that are keeping other companies from kind of invading their space and allowing them to make I guess bigger sized margins. So if a company has a wide economic moat, according to Morningstar, they believe that they will be able to protect their position for around 20 years. And so that's where they rate Salesforce as a wide economic moat. Also, one of the things that's important to me is capital allocation. They are rated with a standard. So I think they have poor, standard, and excellent, or something like that. And they rate kind of middle of the road. So that's not terrible. And the other thing I look at is fair value. It is roughly at fair value. This is the April 4th price. I'm not really sure why that is not updated, but it's not. Let's flip back over here. The current price is $301.73. According to Morningstar, the fair value is $300. So it is really close to what they calculate to be the fair value. So let's look at some of the write-up here. And I was looking at this a little bit earlier. First of all, Salesforce has just begun a dividend. So they issued a 40-cent per share dividend for the first quarter. This is their first ever dividend. So that makes it really kind of interesting and exciting. But here's some things that Morningstar says. We believe Salesforce represents one of the best long-term investment opportunities in software, particularly as the company should provide investors with a nice balance between revenue growth and improving profitability. So, that's a pretty big endorsement there. The other thing to mention here is that it appears that Salesforce was the first, right around the year 2000, to introduce this concept of software as a service. And I call it SaaS. SaaS is the way you'll see it. Sometimes it's probably that way down here somewhere. But anyway, we'll see that in a bit. So, they've got this software as a service model. And here it is right here, SaaS. It is a service that is basically cloud-based. And so historically, companies would need to buy the software. They would then install that on their equipment, on their hardware. And so they had to get all of that lined up, and the software had to be on the right servers and things like that. What Salesforce wanted to do is they wanted to get rid of that whole process so that the software was actually running on their servers, and it was connecting through the web, through the cloud to the customer. And so that was a really cool thing to do, especially 24 years ago when they put it in. They do have a pretty solid cash position. And so their financials look pretty good. We'll walk through those in a bit. They talk about their economic moat, which happens to be, guess it, in their software, right? So their software is an economic moat. They have an intellectual property, intellectual capital around that. So there's a lot of good to say about Salesforce. And I think that's all I really want to talk about here. No, there is one other thing. The other thing I want to talk about is this, and that is Morningstar says that Salesforce has a high uncertainty. Now, what does that mean? That means that they believe that because of market conditions, because of their competition, that there can be some high fluctuations in the stock price. let's go back to this right here. You can see this, right? You can see, let's go to the 10-year one. Look at how volatile this stock price is. I mean, it went up and then it's back down, and then up and then way down, and then up and down and up. And so there's a lot of volatility to this particular stock. So you want to keep that in mind. And here especially is what you want to keep in mind. So over a 10-year period, this would have made, let's go back to the 5-year. Over a 5-year period, it would have been 90%, right? You'd have a 90% return. You would end up with $301, and exactly 5 years ago, you'd have bought it at 158. So you would have had a 90% return. However, if you had bought it at the peak here in November of 2021, you would have bought it at 307, and it is right now only worth 301. And the point I want to make here, and this is worth the price of admission, is that the price, the value does matter. It matters what the value and valuation is of a company. Sometimes if we are patient, so let's say in November of 21, we're like, oh, there's fear of missing out. I want to buy this stock before it shoots to the moon. Sometimes when we're patient, our patience pays off, and it allows somebody to buy it down again in the 140, 150 range. However, it could, from 301. Do I know the future? Absolutely not. Do I think it's going to go up or go down? I have no earthly idea. So, but I do know that it is at fair value. And I like, especially in companies like this that have a high level of uncertainty, I like to get a little bit of margin of safety. So, am I going to be buying it right here? Probably not. But is it worthwhile looking into? Absolutely. I think they've got a lot of things going for them. So let's take a look real quick then at fast graphs. And this is it, actually. So you can see here, this looks really wild, actually. So let's take this. It's at the max. So let me go down to 13 years. That makes it a little more interesting. And the reason I go 13 years is because in fast graphs, they always give you about 3 years of forecasted data. And so that means you have 3 years of forecast, 10 years of history. So looking at Salesforce, the history, the blue line, says that they have historically been trading at a PE of, 67.44. And so this line will be at a 67.44 PE based on the projected earnings of the company, which is this orange line. So yeah, that's pretty interesting. So 67, wow. 67.44, you can see it over here. Okay, so the price, however, is now back up above this line, and the theory is that this that earnings and share prices usually revert to the mean. It means that the share prices are supported by the earnings of the company, and so sometimes it'll actually eventually revert to the mean. It is not terribly overpriced here. You'll notice that there's usually another green shaded area above the orange line. But since they haven't issued a dividend until, actually, they haven't even paid their first dividend yet. It is only, I guess, they're getting ready to pay it, I think, around the 11th. But it's the date, the ex-dividend date has already passed. So you can see here that it's trading at a 35.57 PE today. And this happens to be, this orange line is at a 30 PE. So it does, it believes that, from an earnings perspective, this is a reasonable return on that stock. It's trading at 35. People have historically been willing to pay 67. So, you're in a period here, you're in a gap that, it's, again, I think, reiterating the fact that it looks to be pretty much at fair value. It is not a deal, and it's not way overpriced. It is just kind of right there where you think the value of this stock should be. I wanted to share a couple of other things with you So first of all, this is tip ranks. If you've not seen this, tip ranks for Salesforce, ticker symbol CRM. These are the latest analyst forecasts. So you can see here that the stock's trading around 301.73, which is what we saw earlier. The analysts, the high is 380, that it would be 12 months from now. The high would be 380, the low would be 260, and the average of all of the analysts that rate this company, and there are, how many are there? 38. There are 38 analysts who rate this company. So that's a pretty big selection of analysts. So that out of those 38 people, they believe the average price in 12 months would be $337.32, which gives us an 11.8% upside. So we got that going for us as well. And here's another thing that is really interesting. So let's take a look at ownership. And let's take a look at insider trading. And you will notice here that in December, there was a sale of stock by the chairman and CEO for $132,423,213. Is that an incredible amount or what? So I'm going to go into the insider trading thing. I'm going to limit it to the director, and you know the difference, right, between informative and uninformative. Informative means that they are able to make the decision whether or not to buy or sell. The uninformative would be like stock options, stock grants, restricted stock units, where those things traded, based on the plan documents. So there was no decision by the shareholder. So what we want to look at are the informative cells, and we can see here that this guy, Mark Benioff, sold 500,000 shares back in December. Actually, it was December the 28th, my sister's birthday, and he got $132,423,213. But he also did it 10 months ago on June the 15th. He sold 500,000 shares for $104,569,000. So, I look at this and I say, that's a lot of money, first of all. So, how hungry is this CEO going to be? I mean, obviously, in the last year, he's gotten about $236 million in stock that has been sold on the open market. He's probably got enough money to do whatever he wants to do. Maybe he's got other goals about building wealth or whatever, but he's not going to be that hungry, first of all. And then secondly, he's selling the shares. He's either selling them because he doesn't see the future value in them, or he's just not really a business guy, right? Because if you look at it, he sold 500,000 shares 10 months ago for $104 million, and he sold 500,000 shares 3 months ago for $132 million. And so if he had waited to sell and sold 1 million shares, instead of having 236 million, he would have about 265 million. And if he'd waited until today, I don't remember what that is, but 1 million shares times 301, that's $300 million. So there you go. There's that. So I don't know really how to read that, other than the chairman and CEO has sold a lot of shares. And I don't care who you are, $236 million is a lot of money. So that's important to point out as well. Don't know why he's selling. Can't be because he's hungry, because that's a lot of food, man. That's a lot of steaks. So anyway, I thought I would share that with you. We've already done that, and let's go now to Simply Safe Dividends. I said it was going to be a quick thing, didn't I? Okay, I lied. Sorry. But we'll get through here pretty quick. You can see their first dividend was 40 cents, and It's their first dividend, they're showing their payout ratio, which is 16%. Cash flow payout ratio is 13%. All that's very good. You can see the earnings per share have been growing significantly, although it's really kind of a stair step, right? It's my guess is they are acquiring companies, and this is when I talk about needing to do further due diligence. It's kind of a stair step. So maybe they are purchasing additional companies so that they're offering broader and broader services, and therefore the revenue piece is going up and therefore driving higher earnings per share. Free cash flow, again, is going up. Shares outstanding, this would kind of validate that they're acquiring companies because they've been issuing more shares. And total sales are up and to the right. Return on invested capital, however, is not that exciting. I mean, look at that, 8%. And that's the highest it's been in the last 10 years. So I don't find that very attractive. They do have some debt, but evidently they have more cash than they have debt because their net debt is 0. And their interest coverage is well over 200. So that's great. So if I kind of step back and I say, what are the pros and cons? I think the pro is that they have a great business model. They have a delivery process for their product that is less expensive. It's pretty efficient. It's going over the cloud, and it can be customized, but probably not as much so as if they were installing software. And they have 0 net debt. They have a pretty decent balance sheet. And but the thing that I do know this too, and I won't show you this, but they have I think they've got now I'm not gonna say how much the dollar is because I would be lying. But they have a pretty sizable share repurchase program going on, and I think that we will see some of these shares come down. But that's 984 million. That's almost 1 billion shares. So that's quite a bit. And when your CEO is selling over maybe 1 million shares a year, that's the other thing that kind of gives me some pause. But if I were looking to buy CRM, I don't know that I would buy it here. I think I would be patient and look for that maybe to trail off. But we might miss it too. It might go to $400 and never see 300 again. But that would be kind of where my head is at. Is great company. I love the model. I love the business model. I love their product. I just don't know that now is the time to buy it, if that makes sense. So that, Mr. Ex Dividend Dad, is the quick update on CRM. So let's kind of go back to, let me get that off the screen. Let's go to see who's here tonight. So Pat is back, and he's back in Minnesota, I believe. So hopefully, Pat, it's beginning to warm up there, but it is great to see you. He got here a little early. It looks like he was here at 6:30. So hopefully you got some popcorn, and we're waiting for the show. So Kevin Mendoza's on. It's good to see you. We have K Squared now. And so he wants us to look at applied materials. I'll do that in just a moment. I have marked this one. Edwin is on. Good to see you, Edwin. That was my dad's middle name. I think I've told you that before. Jacob Harrison, good to see you, my friend. Welcome to the program. So Kevin's asking again about the eclipse. It was pretty cool in Arizona. Did I see it? Yes, I did. I actually have a picture of it. Although it's really hard to get a picture from the iPhone with the eclipse. I don't know if it was just the sunlight or what, but I was able to get a little picture. So that's great. Slammer 6789. I just love to say that name. Remind everyone to hit the like button. Thank you, my friend. I appreciate that reminder. And Jacob says, thanks, Slammer. Michael Swami's here. Good to see you, buddy. And don't worry about being late. We were, waiting for you. So now that you're here, we can get started. OJ is in the house. Good evening to you, my friend. And ex-dividend dad. Hope that was helpful for you. Looking at CRM. My buddy, Mr. Income, Fenders 53. I think Morningstar has it about right. I would like to understand future competitive threat. They've been effective so far. Yeah, I think that's exactly right. I think they do have intellectual property around their software, but that doesn't mean that someone else can't do something that would kind of throw them for a loop. So yeah, I agree with you 100%. I think it's a Dow stock for a few years now. Okay. Jim has made it to the house. Good to see you, Jim. And Jim is now in the Discord. So I'm glad you made it, my friend, and it's good to have you in there. Yes, the Edwins are unique. Absolutely, that is a unique name, uh, so Pat says, if you needed to park $250K for 90 days, would you use a high dividend savings account or invest in stocks / ETFs? So I'm going to hit this question, and then I'm going to go back and pick up my buddy Kevin Mendoza's question on applied materials. So would I put it, if I need it for 90 days, would I put it in a high dividend or high yield savings account of some kind? Or would I put it in stocks or ETFs? 90 days, my friend, is a savings account. It is not money for the market, especially $250,000. The market corrects 20% and you got your 250,000 in there, you just lost 50 of it, buddy. So I would say 90 days is, that gets parked somewhere where it can be safe. Let it draw some interest. I agree with putting it in a money market fund of some kind, getting there around, what is it, 4.5%, 5% now. So I would absolutely, do that. If it were mine, I would put it in there, and over 90 days, you make a little bit of money, but you don't risk losing it. And I would really hate it if you lost part of your 250K, my friend. So that's my take on it, and hopefully that was helpful. All right, my buddy Kevin Mendoza. When you get a free moment, I need to know your thoughts on applied materials. So let me kind of give a caveat. My caveat is that any of the stocks that are, like NVIDIA, Applied Materials, Texas Instruments, and I'm drawing a blank on the rest of them, but you get my point. Any of those semiconductor industry stocks, it was really hard for me to pick a winner in all of that. Obviously, hindsight's 2020. The winner was NVIDIA, but at the time I didn't know what the winner would be or who the winner would be. So I picked an ETF of all the semiconductor stocks, and got a big part of the gain. I didn't, if I had invested it all in NVIDIA, it would have been much better. But I felt for my portfolio at my age, it didn't make sense to put all of the all of the money on one horse. So I picked a whole myriad of horses through an ETF, and I have been very happy with that. But so with that, let's go look at applied materials. I'm going to take this off, and I'm going to do that. So let's pick up here AMAT. So you can see over the last year, they're up 79%. That is awesome. 387% in the last 5 years. Year to date, it's not that exciting. 6 months is 48%. The last month, they're down 2%. The last 5 days, they're up 1%, and then 50.57% on a 1 day performance. So I think that's pretty good. When I go to Simply Safe Dividends, they've got an 86, a very safe dividend rating. Now, their dividend yield is really small, and I will tell you that is most likely a function of this. I mean, when your stock price grows 80% in 1 year, that means your dividend would have to grow 80% in 1 year to keep up with it from a dividend yield percentage. So Um, I can't really blame them for having a low dividend yield, but it either says that they are growing like wild and they're going to continue to grow like wild, or it means that they've grown like wild and now we need to be a little bit cautious because their dividend yield is low. We have to do some more research to figure that out. So payout ratio is very low, 16%, 19%. So I think we've pretty much answered that question. Their latest, they are growing this dividend fast, man. 25% was in March of 24. They are growing it fast, but they can't keep up with their share price growth. Over the last 5 years, it's been a 12% dividend CAGR. Look at this. Man, that is a pretty fast dividend growth. They're now at 40 cents per share. And their dividend yield is pretty consistent over the last 3 years, maybe. So, I think that's fine. PE ratio 25.3. So it's a little bit expensive, more expensive than it's been in the last 5 years. But, pretty much in line with the IT area. Let's see if there's anything in here that jumps out at us. We can see that their earnings are continuing to grow and their shares outstanding are coming down. They had like 1.2 billion shares in 2014. Now they have 842 million shares. So they've dropped it by what would that be, 4/12? So that'd be a third, about 33% in the last 10 years. So kudos to them for that. Return on invested capital. Remember, I was giving Salesforce a hard time for their 8% return on invested capital. When I look at Applied Materials with a 33% return on invested capital, that makes me feel much better. I believe that there is some margin there for them to grow in the long run. Net debt to capital 0. That's fantastic. Interest coverage is in the 32 range. So that's fantastic as well. So yeah, I like Applied Materials. The only question is it going to continue to grow? I mean, we look at the past year and it has grown. We look at the past 5 years. It's had a little bit of dip here at the end of 2022. But, let's look at the last 10 years. It's got a bit of cyclicality to it. So, and we all know we're in this, some are calling it a bubble, right? So we're in this semiconductor bubble. So, we have to ask ourselves, is it really a bubble or is it, people just not realizing what the future holds for this stock or for this industry with AI and all this going on? And to be honest, I don't know the answer. I hope it's that the future looks bright because I own that ETF and I'm looking forward to that growing even more. So those are my thoughts on AMAT. So hopefully that was helpful, Kevin. Much appreciated for the question. And let's get back down here and see what else is brewing. So Jim is asking, STLA goes ex-dividend soon. He's up 50%. It pays annually. So I'm not worried about this dividend, but Seeking Alpha says it's in danger of being cut. Not sure why they are down on their dividend safety. And I don't know who that is. So if you wouldn't mind, let me go to Simply Safe Dividends and see what they say. That is STLA. Stellantis NV. And let me take your comment out there so we can see. There, that's better. It is unrated. Dividend yield is 4.59. Foreign taxes are withheld. Let's see which country it's in. It doesn't say. It's founded. Oh, it's in the Netherlands. So, so you would have some foreign taxes that and I know the argument, you get it back when you do your taxes and stuff. It's just a lot to keep up with. So I just typically don't invest in foreign shares unless it's in a tax deferred account of some kind, so that you don't have that tax issue. Yeah, but I don't see wow, look at their dividend, Jim. It's in pounds, or it's in euros, pounds. It's in euros. So, in 2008, 9, I get it. I understand why it would be down then. It jumped up in 10, went away in 11, 12, 13, 14, 15, jumps up in 16, 17, 18, goes away in 19 and 20, comes back in 21, 22, and 23. So yeah, I can certainly understand your concern about the dividend. Their earnings payout ratio though looks fine. It's 24%, 36% from a cash flow perspective. So I think, wow, look at these shares outstanding. Um, I would need to do some more due diligence on this. Are these acquisitions? And let's look at, so the return on invested capital looks fine. Their net debt is zero. So, they seem to have a pretty strong cash position. So, yeah, I don't know. I don't know why they made the decisions they made to cut that dividend like that. It does look to be pretty erratic, though. So I understand your discomfort with it. I would also share that, but it's unrated in dividend safety for Simply Safe Dividends. I'm trying to think if there's anything else that would give us any insight on that. But yeah, I think Jim, if you got some more insight on that and your due diligence about what actually drove that, may give you a clue as to what they might do in the future. So yeah, that's interesting. I've never looked at them before, but it's not something I would be interested for my portfolio. Michael. Michael Swami says, Applied Materials is a grower, not a shower. There you go, my friend. Let's see. Thank you for reviewing AMAT. You got it, my friend. Glad you're here. Let's see. Are they the only ones? Oh, sorry. I got to put it up here. Fast Eddie is in the house. Welcome, my friend. Are they the only ones that own Chrysler and Dodge? They being who? Oh, okay, gotcha. So that company we just looked at, Stellantis NV, evidently owns Chrysler, Jeep, and Fiat. So it's automotive. I should have even looked. It says automobile manufacturers right here. So yeah, I'm not typically a fan of auto manufacturers. I don't own Ford. I don't own GM, and don't own Stellantis. So there we go. Let's see. Fast Eddie says the automotive guys would tell you they can't build anything correctly. All right. Well, that's good news, I guess. Let's see. Michael here says, anecdote here. I was in an auto dealership in the Houston area twice buying a used car. I was the only person in the dealership, and the Houston area is otherwise booming. So, yeah, for whatever that's worth, that's a little bit of anecdotal evidence. And he says he was surrounded by salesmen with nothing to do. That means they were, getting you coffee and water and all kinds of stuff like that. So if investing in foreign companies, should I sell my NEO stock? They're a EV car company that's focusing on battery swapping. I don't know much about NEO. I've heard about it, but I don't follow it at all. So let me just see if they even pay a dividend. No, they don't pay a dividend at all. So it's not anything that would be on my radar. I'm just looking quickly at some of the numbers. Yeah, and it's early. It's early. I tend to gravitate more toward stocks that are, they have some runway behind them, meaning that they, have built their business and they are pushing forward and growing that business. This is NEO is something that is a little early for me, for my portfolio. It works great for some, but Jacob, it's just not for me, my friend. So Slammer 6789 says, I have a question about all the insider traits of CRM. I'll put it in the cool questions for Kevin collection. I love it, man. It's 4Ks now instead of 2. That's fantastic. Great. I'd look forward to seeing that question. Let's see. Yeah, so Jacob says he's using his indoor grill, so he messed up the question. So that's okay, my friend. So you know what I think I want to do right now is because I'm caught up in the questions. So I want to share with you. You guys ever seen a swarm of bees? So we got back from Nashville yesterday afternoon. I was exhausted, took a little bit of a nap, and then I thought, I have what's called a swarm trap. And a swarm trap is not really a trap. It's basically you're providing in a tree an area, a box with some frames and a comb in it that bees might find attractive and move in to this home. And then, you can take that and then ultimately put it into a hive. So I have one of those hanging on a tree. And again, it's called a swarm trap, but it's kind of a misnomer because you're not trapping them. You're just basically providing them a place that they might find attractive. And so anyway, I have one of those hanging in a tree 20 feet away. As I go by, I drive by on my little 4-wheel drive thing. And I look to my left. I'm looking at the swarm trap, seeing if there's any bees going in and out of it. And I look at that and I go, hey, there's nothing there. So I start to drive away and I look down and there's a little cedar tree and it has this football shaped thing sitting there. And that's probably the, let's see, I'm going to pull this up. Yeah, here we go. All right, so I'm about to share this video with you guys. I needed to share that lead in because you're going to see this football shape and you're going to go, what in the world is that, right? So I'm going to stop sharing that and I'm going to share this. So hopefully you guys can see that. I'm going to do that. So this is the video I took last night. It is getting dark and it is about to be sundown. It is dusk. And so I apologize in advance because it's going to be pretty grainy. And the reason it's grainy is there's very little light out there. I know it looks to be pretty bright, but it is not at all. So here we go. And you see here, you see that football right there? Can you see that football shape? That is, believe it or not, I'm going to hit play again. And so it'll get in really close. So can you see that those wings right there? That is basically a football-sized shape of honeybees. And my guess is there's probably 10,000 bees in there. So that's about the size, and it may be more because a package of bees has 10,000 in it, and it doesn't have that many bees in it. So this may be even north of 10,000 bees. There's a lot of bees hanging off that limb. And why they do that is because they have decided they wanted to move for whatever reason. And the queen is in the middle of that, and they're keeping her warm and protected. So that is her deal. So you can see here, as I then back out, you can see that there's that football shape there. And I don't know how I saw that. It just looks like it blends in. But for what? And there's my swarm trap. See that? So they're like 20 feet away from a nice, warm place, out of the wind, out of the weather. And about 1 o'clock this morning, it began to rain and thunderstorm. And so I didn't want them to be out in all of that weather. So what did I do? Well, I then, hopefully you can see that. There we go. I then took that swarm trap down and let's move it ahead a little bit. It's hard to tell if you can see that or not. I don't know if I can make this bigger. I don't think I can. But I just so I can kind of tell you what I did. I took that swarm trap out of the tree, put it underneath the swarm of bees, and opened it up. Took the frames out. I did that before I put it under the bees, and then so it's basically got this empty box that has an opening in it, and I shook that tree, that limb, and those bees basically fell inside this swarm trap. So I put the frames back in, put the top back on, and they can go in and out through this little opening that's in there. So you can see that these bees, so now their queen is inside this box. And so they are kind of moving and going inside this box. Any bee that I didn't get, you can see it walking through the leaves here, coming up this brick, up the side, and going into that slot because that's where their queen is. And it is extremely fascinating. So you can see over there where it was. You can see the bees flying around too. There's, obviously they're not all in that football size shape, but it is getting close to dark. You probably see that there's a lot of light there, and the reason they're in it is because that's the headlights from my little 4x4 vehicle. So it is really getting dark out there at this point. Those are the headlights from my vehicle, and so. Again, about 1 o'clock this morning, you can see it in the trees there. See, the trees are lit up from the headlights from my vehicle. So, but about 1 o'clock this morning, it started storming. And so I was really feeling good about giving these bees a nice, dry place to kind of keep their queen happy. So there's that. And then one other, this is a short one I'll share with you, is this one here. I took this one today, and you can see that they are still there. They seem to be very happy. They're going in and out, and they seem to be liking their new home. So I'm going to keep them in there for a few days and then take them up to what I call my apiary, and put them in a hive so that they can expand and have a lot more space. So that's kind of what I was doing, my friend. So that was a lot of fun, and I was happy to be able to share that today. So let's see if we got anything going on. Yeah, bee squatters. That's right, Jim. Just a bunch of squatters. So it's really unusual, first of all, for a swarm to be that low to the ground. And the other thing I found unusual is they had this swarm trap 20 feet away, and why they didn't pick it, I don't know, but they are loving it now. And Michael says he's got a swarm of bees in the attic at a rental house that he owns. And that would be a little hard to get out, especially in an attic. And I think you're in the Texas area, so I bet it's getting pretty hot down there. So it'll be hot inside that attic as well. I'm not comfortable for people to call me to come get a swarm out of a building, because you kind of have to tear things away, because the bees want to be protected, so they will typically get inside of walls. You got to tear the sheetrock away, you got to tear plywood away, and I'm just not willing to tear somebody else's stuff up at this point. So all right. So Jacob says, the reason I got serious about investing is because I was told to buy 1 million Dogecoins, and I thought that was a joke. That'll probably be my biggest regret. Well, I hear you, my friend. I don't know. I don't know what to say about that, because the reason I don't like, crypto is that crypto to me is a win-lose. It's not a win-win. And like in the stock market, it's a win-win, because you're buying a stock and the company does well. If the company does well, you do well, the investors do well, everybody does well. The customer's getting more of what they want, and it is more efficient. And so it's just win-win all the way around. With crypto, you kind of hope somebody else wants it more than you do for that to pay off. So Kevin says, yeah, that's a lot of bees. That is a lot of bees. And believe me, I had my bee suit on. I was by myself, so I couldn't, video what I was doing while I was doing it. So I wish somebody else had been there so that they could have videoed the actual process. But that is a lot of bees, man. Uh, Absolutely. Free honey? Yeah, I hope so, my friend. That is the idea. So I'm looking forward to getting some honey. I do like honey in my coffee, so looking forward to doing some of that. So if you have dogs, hopefully they stay away from the bees. Yeah, that is really cool to see. Absolutely. So first of all, we don't have dogs. There are dogs in the neighborhood, but the dog won't do that but once because those bees will they'll wear that dog out. So yeah, I don't think that dog would fare too well. He would get a lot of welts on him. So those bees can be aggressive. So Jacob says, I don't think I've ever been called an angel before. I don't know if it's my face or what, but I'd be too scared to approach the bees. And you're right to be cautious because people can be allergic, and I have been stung a few times, and so I'm still here to tell about it. So I don't think I'm allergic, but people can be allergic, and it is good to be cautious about bees because they can get aggressive and they can sting. So if the queen is happy, everyone is happy. Bees, humans, doesn't matter. Absolutely. If my queen is happy, everybody's happy, Jim. You get it. You understand. You know the struggle, my friend. So OJ says, I enjoy learning about bees. They are interesting. Thanks for the knowledge. Absolutely. The OJ, the way I look at life is, I try not to be overly, immersed in any one thing, because I could sit at my computer all day looking at the stock market, watching the stocks move up and down, and catching any news as it comes in. But I find that would be a bit limiting in terms of me growing and understanding, and nature, honeybees, chickens, any of that we have here on the farm is really fascinating, and to learn how all of that works and how to grow bees, how to grow a hive of bees, how to grow a flock of chickens, how to how to do all of that gives you the ability to kind of think differently, and sometimes that actually bleeds over into other areas. So things I learned from bees might apply to the stock market and vice versa. So that's the way I look at it. I find it extremely interesting. Michael says here, I understand honeybees are very docile when they are swarming. Is that true? I think that is true. And there is some science behind it. So first of all, the science is that when they are going to swarm, the bees they will gorge themselves on any honey or pollen that is in the hive, because their goal is to get established wherever they're going. So they're going to want to have honey when they get there because they've got to eat. So they are gorged on that. And so that is what makes them docile when they are like this. I probably could have picked them up by my hands. I'm just not comfortable with that yet. And so just dropping them into this box, which was, a drop of less than 6 inches, I didn't figure was a big problem. But they didn't move really. They kind of dropped in there and stayed. They didn't start flying around and stuff. So yeah, I think that's probably pretty much true. Bees are the key to life. That is, it's more true than we know. They are certainly one of the pollinators that we have in our environment. So without bees, I think that I've heard, and again, statistics, whatever statistic I give you is probably going to be a little bit off. So just take it for what it is. But the statistics are that bees are, I think, about 30% of the pollinators that we have, because there's other things. Honeybees are about 30%. there are carpenter bees, there's wasps, there's dragonflies and things like that are also pollinators. So it's not just the honeybee, but if the honeybee went away, we would lose about 30% of our ability to pollinate food and pollinate plants, which make our food. So I think they are absolutely the key to life. So Christopher, welcome to the program, my friend. Absolutely, the best minds aren't fixated on one thing. That is a great way to put it. I think I may steal that, but yeah, so that's kind of where we are. And we got 5 minutes left. Is there anything? There was something else I was going to share with you guys, and now I've lost it. I don't remember what it is, and maybe I've already shared it with you. I don't know. So, anything else you guys want to know? Give me something in the feed here because I am really struggling with what I was going to share with you guys today. It was going to be something at the end. Oh, I know what it is. I remember now. So, my buddy Jim Betts has given me an idea, and we really are stealing that from my buddy Russ Knopf from Dapper Dividends. And that is Russ leaves the program every week with his Pee Wee Herman video. Well, I'm not a Pee Wee Herman fan. This wasn't my era. But I've got a special little video from my era, one that a show that I really loved, and we will leave the show tonight with that video. So, that's going to be here in a few minutes. So, let's see. OJ, Kevin, it would be nice to see the animals one day. Yeah, that's a great thought. I was gonna work a bit on these chickens picking stalks today, but it rained a lot today, so it just was not conducive for me to have chickens picking stalks because they were not interested in being out in the weather. So, and I get it, I wasn't either. So. Michael says he found a humane bee guy when I had the problem in the attic. He saved most of the bees and the queen, got her first, and the rest followed. Yeah, that is right. That's the way they do it. And, it's really interesting because a lot of people think the queen tells the bees what to do. And it is really the opposite. The bees tell the queen what to do, but they all recognize that that is their queen and that she is the one that is laying eggs to perpetuate the hive. And so wherever she is, that's where they want to be. But they are the ones that determine so if you think about it like this, in the hive they have those little like octagon things, which are the individual places where they put their brood. Based on the size of that hole is what egg she will lay. So she either lays a worker egg, a drone egg, which is the male, or a queen, an egg in a queen cell. And if there's an egg in a queen cell, she knows her time's about up. So anyway, I could talk about that all day. It is really fascinating. What is Forex trading? And I heard it's dealing with actual currency. Jacob, that's a great question. I don't know. I've heard of it, but it's not something that I have looked into. I will look at that, and maybe if you can slide that into the questions for Kevin Corner or whatever that was that they said earlier. So that's awesome. I'd like to know how it works, and we're almost done. So yeah, I'll try to pick it up next week. So let's do that. Foreign exchange trading. Take your ulcer medicine first. That's a good thought. So Michael, thank you. Hit the like button. And so with that, I think we're going to call it a night, but I am going to leave you with this little video here. And hopefully I do this right. If not, I'll figure it out for the next time. But I've enjoyed being here with you guys. Thank you for staying with me. Thanks for, just kind of being here, throwing questions out. It's just fun to hang out with you guys. I enjoy this a lot. I look forward to Monday nights. And, some have been suggesting that I bounce back maybe to like a Friday night, not a Friday night, but like a Saturday night, Sunday night. And so, if you get a chance, either in the Discord or in the comments to this video, let me know what you think. Yeah, is it better on the weekend or is Monday night good? What do you think? Or maybe it doesn't matter, and just let me know that as well. So with that, my friends, I am going to get out of here, and I'm going to go probably relax a little bit after all the bee work that I did today. So with that, here you go. Here's the video.